Oh, right. Um, Today I want to review my idea, published, shared yesterday, titled Wait and Go to retest the zones around 1770 for bullish setup. Because now, today price dropped about $16 per ounce, almost around this area. So let's see. All right, the the lowest level is 1773, very very close to this area. Let's have a look on the weekly chart. Oh, come on. Oh, okay. So, I got it because the weekend's not been ended. All right. So the reason why I want to looking for the bullish setup around this area is because of the pivot here, the pivot here. So the obviously on the weekly chart, the format structure here. So this is a really a key zone, and the price reversal is very likely to happen. And look at this MA. This is my midterm MA line, which should be pretty strong. But that's my projection of the price. And if the price hits the zone, of course, there's a probability of direct violation. If the momentum is to the downside is pretty strong, and price directly hit a violated zone, and then I'm going to looking for a retest and then short setup. But that's going to be another story. Okay, so let's check out the price here. So today, let me make it larger to have a clear look. Okay, so today's obviously when price opened and it's retest the structure. You see there's not a structure here. It's drop base drop. All right, so it's a supply demand tactics. Price tried twice but couldn't break the zone because you see it create a lower low. So when the price create lower low, it's indicating that the momentum to the downside is pretty strong. When it's retested the upper zone, most very likely it can't pass the zone. So pull back directly hit an area around my zone. You can see there's a wiggle here. So price do have action to the zone. So what I'm expecting is so in order for the bullish setup, what I'm expecting is something like this. Yeah, this is one possible scenario: big bearish candle, then followed by small bullish candle. What does this mean? That means that the momentum to the downside become weak. All right, so especially here, it's got low, right? It's got low, it's got high, it's got lower high, a higher low, sorry, and create a higher high. So when we saw this pattern, it means the downside, the downtrend has been terminated, and we have the permission to long. But when and where? That is a good question. Here, why here? First of all, it's a flip zone, right? So the previous pit zone, whatever you call it, flip zone become demand zone. And second reason is this is just look at this fib, right? So retreats to the 50% Fibonacci retracement, all right? So this is a very nice setup, a bullish setup here. So what I'm expecting, if price form a pattern like this, of course this is just one of the pattern. This is just an example, and I want to show you guys. And if show some bullish pattern like this, you got a low, high, high, low, high, high, and then break out and price close above the midterm MA. You see midterm MA, and also we see the short-term MA, they turn up, right? They turn up, which is good sign. Okay, so we have so this is called what we call Austin Hanson in supply demand core trading strategy. It's got a morning houses, confluence trading. We got MA, we got Fibonacci, we got flip zone, and we got the short-term MA turn up and have crossing here. So all those are good signs. This conflict trading. Just do not hesitate and just put trigger to, join the long trade. All right. So this is it. All right. So this is what I'm expecting to have if price to show something like this. All right. So this is just one possible scenario. Okay. I'm gonna stop here. Thank you so much. Hopefully it's helpful for you guys. Stick to your plan, plan your trade, and trade your plan.